All right, so I'm gonna give you guys a breakdown. This Most of this video is to cover the emphasis or why it's so important to understand framework. So if you look here, all right, just starting from the top, or let's even go to the 1 week, right? Well, what we're seeing is prices is drawing on previous month's lows. All right. Well, that's gonna also trickle down into price drawing into previous week's lows. All right. You can see here we've been drawing on previous week's lows. All right. We get beyond this point right here. All right, which we can view this as a mitigation block or a breaker. And the reason that I say that is because this obviously is a failure swing. However, if you're looking at it from the stance of this little accumulated range here, right? We run out short-term lows, run out short-term highs, and then we're back through the range. Then you say that that is a breaker. Okay. So with that being said, right, it really doesn't matter. This is a point in price that could serve as a catalyst for sending price the opposite way. All right. Now, of course, we are in a bit of a consolidated range. However, whenever you have those instances, that's where you want to zoom out and you kind of want to flow what that higher time frame order flow is. All right. So moving down to a daily chart, understanding that this move on last week traded right up into that higher time frame breaker or mitigation block, right? Also, we have rejection blocks here, all right? And then what happened is we engineered these short-term highs. We ran those highs out and immediately traded back inside of the range, okay? So from there, going down to a 4-hour chart, what we can see is this is a market maker sale program. Okay. All right. So original consolidation, you can see prices reaccumulating. We reach up into the rejection blocks that we saw in the weekly time frame. All right. And something I want to bring your attention to is this range of price. Okay. Let's actually focus on just the bodies here. All right. And ask yourself, is this range of price, right? Is this a balanced price range? All right. And if this is a balanced price range, right, and price leaves that range with a certain degree of magnitude, right, should price need to return back to that price range? All right. So just ponder on that question. All right. Now we trade above these highs, we take out those relatively equal highs, and then we have an immediate rebalancing of the range, which is more characteristic of an opposing stop run. All right. And now that we've ran this side of the range, prices is wanting to rebalance that range. So on last week, I think it was Friday, I believe, yeah, Friday, I talked about this area of price, right? Because this is also a balanced price range, right? Price goes down, back up, and then back through that area, right? Once it leaves that area, it becomes a balanced price range. So on Friday, right, I wanted to see if we were gonna get some type of move away from that area. All right, and I didn't want to see price trade through that area. All right. Once I woke up and it traded through that area, right, starting in the London session through I guess this candle closes at 9 a.m. New York. That's when I posted in the chat, hey, risk off for me. All right. So going to this week, and seeing us trade back down through, closing through that area, we have 4-hour changes in the state of delivery, right? That's what prompts me to want to go back in and be interested in this trade. All right. And then also we have this little BPR. You can see the precision here, right? Price never even, bodies of candles never even go up into that area or close into that area, right? And also understanding that we're on the sell side of a curve. All right. So if this is my smart money reversal up here, then, my expectation is that that rebalancing of the range is just going to be that first lower sell, all right, or that redistribution, all right. And we can also view this little area here as a breaker, all right. And then to sum this whole piece up, this is nothing but a bear stealing range, all right. So I'm covering this because I just want to emphasize how important it is to focus in on framework. Right? It has nothing to do with execution, right? This is framework, right? Because you have to have a proficient understanding of framework before you can ever move to getting precise entries or wanting to take precise entries, right? Because The name of the game is not to always have the best entry, but it's to make money, right, at the end of the day. All right. So going down to a 1 hour chart, if you remember from the mini series, right, I brought you guys attention to seeing things like this. All right. So think about what's happening as this market is moving up. All right. As it's moving up, obviously there is sell interest being placed into the market. Okay, as you can see, right, sell off here, right, little sell off here, and then we're up into that premium price point. All right, so that means that this area of price, right, up in here, right, has a potential to be reclaimed. All right, and as you can see, price trades higher, right, and it's incorporated with all of the other things that we understand about price, right, the IPDA market structure, market maker sale program, the higher time frame order flow, right. You have to be able to mend these things together to make sense of price. Okay, so we're coming up into this area, right. This is also a higher time frame and efficiency, right, coming up into this area, right, and seeing if it's reclaimed. That causes changes in the state of delivery, even on a 1 hour chart on Friday. But obviously, we're not going to execute a trade this late on Friday. And then if you look here on a lower time frame, if we were to go down to a lower time frame, all right, this is what I mean when I say price creates market maker models that become fractals in and of themselves. All right, you can see this as a short-term high, intermediate. So there's so many different things that you can see and derive from this. All right. However, the overall framework is stating to us that price should want to draw to sell side liquidity pools. All right. So we have these relatively equal lows here, and then if you understand market maker models, right, typically price will want to get back to that original consolidation. Okay, or even trade through that original consolidation. All right. So my entry, I'm short from I think it's 6434, I believe. All right, not gonna go into executions here. And then one other piece in terms of just framework is once you once you have arrived at a bias, you know where price is drawing to. Okay, you can grade price swings. All right, and ICT mentions this, I think, in the swing trading model, right, of his mentorship. But you can grade price swings. All right, so if we were to grade this swing here, let's say that I was only focused on price reaching back towards Thursday's low. All right, well, in grading this price swing, when price gets beyond the 50% mark, at that point, I'm expecting a stop run. All right, so if you go on your own time, if you go in here, right, you can imagine there's a lower time frame stop run, which is to rebalance this inefficiency, or you can see those that double pass through here, so that area kind of holds up pretty strong. So regardless of how this trade plays out, and my expectancy on this, if I'm short around 6434, I'll post the entry in the chat. Stops are inside of this candle's wick. The expectancy on this is 1 to 7. All right, almost 1 to 8. If we make it to these lows, all right, I am understanding that this week is the last week of a month. This is the last week of a quarter. Price could have a tendency to want to just stay or trade back inside of the monthly range. However, if we make it here, we're looking at around 8R. I did take 25% off at 1 to 2. That's my usual practice because that funds 50% of the initial volume. However, if the trade works out or not, right, we're risk free at this point. If it works out or not, right, what's important about this whole video is just simply to emphasize framework. All right, so this has nothing to do with execution. It's all about framework. And if I could give you guys one thing, it would be to really focus more on framework, uh, because that's what matters over the precise entry stuff. Okay, so I hope you guys learned something from this, and I'll see you on the next one.